This is Horizons Middle East and Africa, our top stories this morning. Bets on cuts. The MSCI All Country World Index rises to a record after US inflation data fuels speculation that the Fed will have room to cut rates next month. And US President Donald Trump is to consider expanding the government's cut from China chip sales as Bloomberg reveals that Beijing is urging local companies to avoid Nvidia's H20 processors. And Ukraine's President Volodymyr Zelenskiy says that he won't cede the region of Donbas to Russia as he pushes for Kyiv to be included in Friday's talks between Washington and Moscow. It's just gone 8 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basecci. Welcome to the programme. And it looks like the market got just what it ordered. A benign inline US CPI print yesterday, pushing stocks to fresh records. And you can see the optimism continuing in the futures picture this morning. More so in Europe, it has to be said, because, of course, we're playing catch-up to yesterday. But already stocks powering ahead in the Asia-Pacific, and the MSCI Asia-Pacific Index up over 1% already. If you flip the board over to the cross-asset picture, you did have the president throwing a bit of a spanner in the works yesterday, renewing his threats on the Fed chair, Jay Powell. And you've got doubts also swirling around the independence of the Bureau of Labour Statistics' independence. But you've got the two-year yield at 3.73, euro-dollar at 1.16. Oil higher today, but of course we keep an eye on that summit in Alaska coming on Friday. So holding on to its gains as we get towards it. And gold here also at $3,349 a troy ounce off the back of that CPI. But let's get a check on the Asian markets now with Min Min Lo. She's in Hong Kong for us. What are you watching, Min Min?
Hey, Lizzie, as you can see, a sea of green on the board here, and it's really a very broad-based rally. The Asia-Pacific Index up by 1%, but this is led by the Nikkei 225 up 1.6%. It already hit that record high yesterday, and this is the sixth consecutive session of gains on the Nikkei. The Kospi is about 3 or 4% away from record highs. TAIEX already flirting with record highs, and the Shanghai Composite at a 4-year high as well, erasing the losses since the peak of 2021. And this is a lot of it is because of the relief coming through right from the US CPI print. We also have that EM tailwind coming through as well because of the dollar weakness. We rarely talk about Indonesia, but the Indonesian benchmark yesterday had its best day in 4 months. But flip the board, take a look at a sector we are watching closely in China, the consumers sectors, because this morning the Chinese authorities held a press conference announcing that they will be giving out consumer loan subsidies for interest payments. It amounts to about 3,000 yuan per person as a cap. This is for small item loans below 50,000 yuan, but for big ticket items, they apply to sectors like autos, healthcare and education. And here we are seeing the Hefei department store group up by 10%, Alibaba Health as well up 2.8%. This consumer loan subsidies is also being given out to the services sector firm as well. A very big stimulus push from the Chinese government. Lizzie.
Min Min, great stuff. We'll come back to you in just a few minutes' time. Min Min Lo out of Hong Kong. We thank you so much. Now, as I say, that US inflation report is bolstering bets that the Fed will cut rates soon, with some seeing an increased possibility of an outsized reduction.
What we see is that inflation creeping over and spilling over from goods into services. And that is an issue for the consumer in terms of, is the consumer now starting to make tougher choices because of the impact of tariffs?
It appears that companies have room as a result of still high margins coming out of the pandemic. Companies have room to sort of more slowly pass this on to consumers.
People say, oh, the retailer's going to eat it. No, they're not. They just wrote the check. So of course it looks like they're eating it. Walmart writes a check, but eventually they're going to pass it on.
It comes one way or the other. It's either going to be corporate margins, which all else equals a drag on the stock market, or it's going to be in the consumer, which is a drag on the economy, which then feeds through to the stock market.
US Treasury Secretary Scott Bessent has also suggested that the Fed should be open to a 50 basis point cut next month. So let's get the market reaction with Praveen Jagwani, Global Head and CEO at UTI International. Really good to see you, Praveen. Thanks for making time for us this morning. You've heard what other analysts had to say there. What's your take? Is a September rate cut in the bag after that CPI print?
You use the word, Lizzie, benign for the CPI print, and I'd say it's anything but benign. You dig beneath the surface, there's some serious warning signs on U.S. inflation. The mega trend we're all living through is really deglobalization. And that itself, by definition, is inflationary. You add to that mix the tariffs and the trade wars, and you get potent cocktail of sustained inflation. This isn't like a guest who came for dinner. This is a guest who showed up and has occupied your guest room and isn't going to leave in a hurry. So inflation is here to stay, and even though the September rate cut might be in the bag, but that's in the backdrop of the impact of tariffs not fully baked into the society. I'll give you a simple example. You look at the prices of eggs, coffee. U.S. imports 75% of its food products. Prices of coffee have gone up 14% year on year. Prices of beef have gone up about 11% year on year. The Big Mac is about 9% more expensive. And even though the CPI print seems benign, it's hiding some very ominous signs. The core PCE, which is the metric that the Fed loves, the personal consumption expenditure, it's about 2.7, 2.8 right now. I would imagine by December, it could be 3.3, 3.4 in that region once the tariffs start to bite.
But Praveen, what's the bigger risk here, the stag or the inflation?
That's a great question. I think we'll start with one and wind up with the other. Growth is slowing down, and America's GDP expectation for this year is about 1.9%. If Trump follows through with the tariffs on Mexico and Canada alone, you would have that GDP number reduced by almost 50%. So in a declining growth environment, you reduce rates and inflation is creeping up because of externalities. It's going to be a tough cocktail for U.S. to manage. And stagflation seems like an increasingly realistic outcome.
So as we look ahead to the US retail sales print on Friday, Praveen, do you think that actually the US consumer isn't as resilient as perhaps earnings have been making out?
I would suspect so. I saw some statistics that suggested that 20% of the US consumer is really doing the heavy lifting and carrying the weight for the entire population. If you look at auto loans, which are in default 90 days past due, so people have missed 3 months of their car installments, that tells you a picture of the pain on the ground. And that's social unrest that could be unleashed because of just the delinquencies on all mortgages, student loans, credit cards. That's not going away in a hurry. So consumption by a select few, yeah, that's possibly misleading. And as data emerges, we'll get a lot more clarity.
And just away from the data, of course, there's the politics at the Fed. The Treasury Secretary suggesting that there are even more names in the mix when it comes to replacing Jay Powell. Do you think that's actually quite a smart move from President Trump, in that even more hawkish names might be persuaded to speak and vote more dovishly if they're on this list?
This is the start of a dangerous precedent. When a president starts to mess with bigger powers and tries to change the direction of mega forces, yeah, that's, let's see how this plays out. And like I said, even though the September rate cut may be baked in by politicizing the Fed and getting the right doves in the right slots, but longer term, that's going to be a harsh decision. And it'll be hard to see any further rate cuts beyond the September FOMC. I'd be surprised if there are any further rate cuts beyond September.
Praveen, if we can turn to the geopolitics, of course, we're looking ahead to this Alaska summit between Trump and Putin on Friday. But the president has tempered expectations of what can be achieved. He's called it a feel-out meeting. Do you think that oil's got a bit over its skis, actually, with this price drop, suggesting maybe there are going to be easier oil flows off the back of this meeting?
Again, a big question. See, geopolitics, geopolitical chess is a bigger driver of oil prices than simple demand and supply. And the big question really is, how much of the Russian oil is going to be taken off the market because of coercion by Trump on countries like India and China? If India completely weans off Russian oil, that leaves a lot of Russian oil on the sidelines, and India then, let's say, pivots to the Saudi Arabian or the Iraqi medium crude. That will create temporary spike in oil prices. I would imagine we could see oil around 85, 90 even. But the fact that OPEC Plus is consistently increasing supply and output, and there are some countries which habitually increase, they violate the quotas and produce an excess. I would imagine, given the global environment of low growth, oil could easily settle around the 75 mark. So it isn't a huge challenge, but in the short term, yes, geopolitically, it would be quite tricky.
But you've suggested India is a good place to put your money long term when it comes to the equity picture. But how do you factor in Donald Trump's tariff threats then? And is the backdrop not that you've already got the stretched valuations, you've got slow earnings growth? How do you square that circle?
With India, the lucky thing is that 60% of India's GDP is dependence on domestic consumption, the middle class buying tea, coffee, soap, shampoo, bicycle, shirts. And being insulated from global upheavals, that, I guess, gives India a degree of safety. India's export dependency is quite small. And within the overall exports, which are quite small, exports to the US are even smaller. So about 2.7% of India's exports are to the US. The ones which get impacted by tariffs are even smaller. So let's say about 1.6%. And from that, I guess if India does nothing, it rolls over, plays dead, and all the tariffs flow through, then possibly there's a hit to the Indian GDP of about 50, 60 tops basis points. So instead of 6.4% GDP growth, India grows at 5.8, 5.9. It still remains the fastest growing economy in the world. But of course, India will pivot. It will transfer its exports to other countries. For example, India's biggest export is jet fuel. Who does it send jet fuel to? UAE, the UK, Netherlands, and Singapore. Netherlands is the place where it farms out jet fuel to all of Europe, which means if India stops buying Russian crude and tariffs bite, prices of airline tickets are going to rise in Europe, similarly in Asia. So there is, in this interconnected world, there's ramifications.
Yeah, you wonder how it feeds back into the geopolitics if indeed President Trump's influence over India is limited via tariffs. But Praveen, we thank you so much for your analysis. As always, Praveen Jagwani, Global Head and CEO at UTI International. Don't miss as well, we've got another important conversation coming for you later today. That's with the US Treasury Secretary Scott Bessent himself. It's on Bloomberg Surveillance at 3:30 p.m. Dubai time, 7:30 p.m. in Hong Kong. Well, staying in Washington, President Trump says that he's considering a lawsuit against the Fed Chair Jerome Powell over cost overruns in the central bank's headquarters renovation. In a Truth Social post, he calls Powell's handling of the project grossly incompetent and damaging to the economy. Trump's also taken aim at Goldman Sachs CEO David Solomon, saying that the bank was wrong about the impact of his tariff agenda. Well, still ahead on the programme, China urges local companies to avoid using Nvidia's H20 processors, particularly for government-related purposes. We'll bring you the details next. This is Bloomberg. Let's go back to the chip story now. Bloomberg has learned that Beijing is urging local firms to avoid using Nvidia's H20 processors, complicating its return to China. The move comes after the Trump administration's decision to lift a US ban on China sales. So we can get more details now with our China correspondent, Min Lo. Min, good morning again. Just talk to us about what the motive is here for Beijing. Is it more about national security, or is it more about promoting Chinese chips?
Well, it's really about both because you can't really decouple one from the other. The reason why China is trying to promote its homegrown chips industry is because of the national security risk of being over-reliant on the U.S. And in this case, U.S. officials have publicly been calling for the installation of these location tracking capabilities in Nvidia's chips to ensure that they don't fall into the wrong hands. And that's why the Chinese government is issuing this directive, urging not just state-owned companies, but also private firms to not use Nvidia's chips, especially when it comes to government-related or national security-related projects. Now, this doesn't mean it's an outright ban. It's a sort of window guidance similar to the sort of restrictions that companies like Tesla and Apple faces when it comes to using these products in sensitive areas. So it remains to be seen how strongly it will be enforced. We know that the private companies, the big ones like Tencent, ByteDance, Baidu, they were among the companies that were summoned by Chinese authorities, according to Reuters, and they were questioned about their decision to buy H20 chips over the local alternatives. And authorities were asking them whether they encountered any security risks so far. So we're looking ahead to Tencent's earnings call today. That's definitely something that investors will be watching out for. Any guidance from these companies, whether they will be shifting their buying patterns away from U.S. chips to the homegrown alternatives.
But for Nvidia, how damaging is this? And also for the US Treasury's coffers?
Yes, we already see the market reaction yesterday when this news broke, right? Nvidia was down about 1.4% or so, I believe. But I mean, you look at what is available in the Chinese market right now. The H20 chips is by far still the most advanced chips that are available to Chinese companies. And so some analysts are saying that maybe the impact won't be so great on Nvidia because these companies will still want to get their hands on those chips. You look at, Tesla and Apple, they're still widely used in China. But perhaps the restriction could be, limited to certain sensitive areas, but it remains to be seen whether the Chinese government will take a more expansive stance on this restriction of Nvidia chips usage in China. I guess it possibly could also depend on the direction of U.S.-China relations, how trade negotiations go as well. But certainly it's going to hit Nvidia's profits, but perhaps not as bad as some might be expecting.
All right, really crucial context. We thank you so much, Min Min Lo out of Hong Kong, and we'll get back to you again later in the programme. Thank you. Now, China's most valuable company reports earnings today, as Min Min said. Tencent expected to deliver its slowest net income growth in more than a year. Investors will be focused on the company's ability to absorb the weakening domestic consumption and its plans to boost AI capability. Bloomberg Intelligence says that it doesn't expect Tencent to generate significant incremental earnings in AI this year. Well, coming up on the programme, Kenya is ramping up its infrastructure projects with multi-billion-dollar plans to expand rail and upgrade airports. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's just gone 5:22 a.m. But let's head to Africa now. Kenya is ramping up its infrastructure ambitions, and the government plans on raising $4 billion to fund the extension of its China-built railway. It's in talks as well with Etihad Rail to run freight operations on the line. And we can get more details now with Bloomberg's Ondiro Oganga, who joins us now. Bloomberg, Ondiro, just talk to us about what we know about this potential partnership.
Morning, Lizzie. So Kenya finds itself in a very unique position wherein it has very little room to borrow for these mega infrastructure projects. And also the ground back at home is very hostile. Kenyans have said they don't want any more taxes. And so securitization is the new kid on the block. They're trying to securitize import levy, raise about $4 billion to go into this project so they can extend the railway line all the way to Kisumu, connecting the border to Uganda. And they have been dating investors. They've been talking to people more. And they've been talking to Etihad Rail. They want them to come on board as concessionaires. And this is part of the bigger plan that Kenya had signed an agreement with UAE called the Comprehensive Economic Partnership Agreement that will deepen investment in Kenya, both in terms of infrastructure and also promote trade. But to make a business case for this investment, Etihad Rail requires that Kenya proves that they can transport up to 17 million tons of freight via this rail annually. And so to try and bring this to life, Kenya will be working with its regional neighbors, that is Ethiopia, South Sudan, Uganda, and also DRC. All these are landlocked countries that do not have access to ports. So this is a project that aims to connect the port of Mombasa all the way to the region to ensure that they can match that freight tonnage that Etihad Rail is asking for to make this a viable project.
OK, something that we've waited for a long time, that extension. Meanwhile, in central banking, you've seen Kenya cutting rates for the 7th consecutive time. I wonder how significant it is that you've got rates below Uganda's finally.
Quite significant, and the central bank has been making consistent effort to try and increase uptake of credit, particularly for the private sector. Rates were 13%, and in about a year, they've come down to 9.5%. They're trying to send a message to the market. They're saying, we're trying to make funding accessible to you. Come and borrow this money. If you look at economic growth last year, it was slightly slower than projected, and so they're trying to do everything to jumpstart the private sector, to try and inject vibrancy in the economy, create jobs again, and also just buy themselves some little bit of favor, because the ground at home, Kenyans are saying the economy is tough, young people do not necessarily have jobs. And if you look at it, there's transmission breakdown. The central bank has been cutting rate, but it's not reflecting as quickly as they would like in the private sector. Commercial lending rates are still slightly high, and we've seen some hesitation, though if you look at the last year, we are seeing uptake of credit, particularly from the private sector, beginning to increase. And the central bank is even looking at proposals of pegging rates on the rate that they propose, and then allowing commercial banks to add risk and profit margins so that the private sector can be able to afford and access funding.
All right, thank you so much for your coverage. Bloomberg's Ondiro Oganga, lovely to see you this morning. And let's just sort of get you some other top news out of Africa. South Africa's jobless rate climbing to a year high of 33.2% in the second quarter as agriculture, finance and community services shed positions. Unemployment in the country now stands at 8.4 million, adding pressure to an economy that's grappling with 30% US tariffs on key exports. Earlier this month, the government warned that the levies could cost 30,000 jobs, hitting autos and agriculture the hardest. Well, coming up on the programme, we're going to look ahead to President Trump's meeting with Vladimir Putin as Ukraine's leader says that he will not give up territory to Russia. The details coming up next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Bets on cuts. The MSCI All-Country World Index rises to a record after US inflation data fuels speculation that the Fed will have room to cut rates next month. And Ukraine's President Volodymyr Zelenskiy says that he won't cede the eastern region of Donbas to Russia as he pushes for Kyiv to be included in Friday's talks between Washington and Moscow. And we speak to the CEO of Presight AI, Thomas Promotedham, after the company says that its first half revenue and net profit rose, fueled by new acquisitions. It's just gone 8:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Jomana Basechi. Welcome to the programme if you're just joining us. And as I say, we got exactly what the market wanted yesterday, an inline US CPI print, if not benign. And that pushed stocks to a record yesterday, and it continues in the futures picture this morning. Just about when it comes to the US, but more so in Europe, because, of course, we're catching up to yesterday's US session. But already in the Asia session, you can see the MSCI Asia Pacific Index up more than 1%. Now, if we flip the board over to the cross-asset picture, part of this is because of the fueled bets on Fed cuts. Traders pricing in a 90% chance, roughly, of a September cut. Some talking about a 50 basis point cut. The Treasury Secretary even calling for that. And you've got the two-year yield now at at 3.73, euro dollar at 1.16, Brent at $66 a barrel. So it's holding on to this decline as we look ahead to that Trump-Putin summit in Alaska on Friday. And gold there pretty steady at $3,349 a troy ounce. So just about clinging on to its gains off the back of that inflation print. But let's have a look at how Asian markets are faring now. With that is Min Min Lo in Hong Kong. Min Min, what are you watching?
Hey, Lizzie, as you said, that inflation print from the U.S. and the rate cut expectation really fueling this rally across Asia as well. You look at some of these superlatives that has been compiled by our markets editor, David Inglis. The Nikkei 225 is already at a record. TAIEX flirting with a record. MSCI Asia Pacific 4% from the record. Kospi as well, just 3% away. Onshore in mainland China as well, we are seeing the Shanghai Composite just at a 4-year high. The Shenzhen Composite as well at a 3-year high. But I really want to point out some of the tech moves in China today because we are looking ahead to the Tencent earnings later today, and we are already seeing these move up of 3%. This is a tech heavyweight in the Hang Seng Tech Index, so we are seeing that helping lift the index up 2% because we are expecting to hear a double-digit increase in revenue in the second quarter. That will be the third consecutive quarter of double-digit rise, and because the valuation of Tencent has been so low, it's very cheap compared to its international peers like Nintendo, Meta or Sony. Here you can see that the earnings estimates had reached a record high right now, but we're still about 25% away from the peak in 2021. So there's a lot of room to increase, and investors expecting we could see Tencent reaching historical highs in its share prices in a matter of time.
All right, thanks for setting us up for those earnings, Min Min Lo. We appreciate all your work this morning. Min Min Lo in Hong Kong. Now, back to the geopolitics. Ukrainian President Volodymyr Zelenskiy is rejecting Vladimir Putin's demand that Ukraine give up the Donbas region to secure a ceasefire. He's insisting that any talks must include Kyiv and its European allies to address both territorial and security guarantees. Now, Putin, of course, is due to meet President Trump in Alaska on Friday. And ahead of that, we can speak to Stuart Livingston Wallace, Bloomberg's executive editor for the Middle East, North Africa and Russia. Morning, Stuart. Look, you've got Trump and Marco Rubio, the US Secretary of State, both framing this summit as a feel-out meeting. Do we expect, therefore, anything concrete to come out of it?
Yeah, good morning, Lizzie. I mean, I think it's too early to say in the sense that if both of them have come out with a very similar line, they're clearly trying to sort of manage expectations that there's going to be some almighty breakthrough at these talks in Alaska. Having said that, they are going into a summit with a very, very experienced negotiator in the form of Putin, who has made some very clear demands about what he wants before he's prepared to come to any sort of discussion about a ceasefire and then some longer-term peace. And I think Trump has indicated that a land swap of some sort is possible. So really what we'll be looking for on Friday is the sort of the contours of what that might look like. But again, Trump and again Rubio have made it clear that they may go into that summit, nothing comes out of it whatsoever.
Well, so as we wait for that, the next catalyst could be this meeting between EU leaders and Zelensky talking to Trump and his VP, J.D. Vance, today. What do we expect them to say? And is there any chance that actually that could influence the Alaska talks on Friday?
Yeah, I mean, I think it is possible there may be an influence there. I mean, in terms of the position, I think the EU in particular, with strong support, of course, from Ukraine, have said that, there mustn't be a forced redrawing of borders. In other words, the EU position largely seems to be a ceasefire now along existing lines, and then you get some sort of negotiations for a longer-term peace. However, that is somewhat at odds with kind of the rhetoric that we've been getting out of the US side. So again, are they going to be able to influence them? Really hard to say, but they're certainly going to give it a try. And I think, again, Ukraine has been very firm on this, that they're not prepared to basically retreat from basically what accounts for 3,500 square miles of territory that Russia's been unable to capture militarily for the better part of a decade.
All right, Stuart Livingston-Wallace, we thank you so much for that analysis. Bloomberg's executive editor for Middle East, North Africa and Russia. Well, let's think about the market impact as well, shall we? Oil traders are going to be watching these talks very closely between the US and Russia. The summit could result in an easing of US sanctions on the OPEC Plus member, and then that could see more supply coming into the market. So let's get more now with Bloomberg's Middle East energy reporter, Anthony de Paula. Morning, Anthony. Just talk to us about how the Russian flows are looking as we head into this Trump-Putin summit on Friday.
Good morning, Lizzie. Yeah, as we get into that meeting, the flows are looking normal, as they have been pretty much over the recent past. Seaborne flows a little bit more than 3 million barrels a day, and that's a slight decrease since last week, but pretty steady overall. So we're not seeing any kind of preemptive impact, really, of potential U.S. sanctions impacting those flows. We have seen some Indian refiners who have held back on some purchases of Russian crude, requesting other Middle East grades, even some grades from the Americas. So that is bringing up some of the local prices for Middle Eastern crudes relative to Brent-linked European-priced crudes, because we have seen a little bit of that switching. That's because the U.S. administration has put tariffs on India and added some additional tariffs because of their purchases of the Russian oil. So that's having an impact there. Russian oil goes mainly to India, goes into China, so we could see some switching there, but we're not seeing a huge drawback yet in exports because of this issue. And as you said earlier, oil is kind of holding where it was, which doesn't indicate that traders are seeing much change, really. It's kind of a wait and see. Not much other news going on in the market until that meeting, until we get to see kind of if there are any more decisive moves on Russian production, Lizzie.
Well, while we wait and see, of course, you had OPEC keeping its bullish outlook. We're waiting for the IEA report later today. What's driving prices more? Is it the geopolitics or is it the supply and demand story, Anthony?
Yeah, on the supply and demand side, definitely there's a lot of supply coming into the market. We've seen the OPEC Plus group making increases in production, rolling back a tranche of production cuts. So they're going to be bringing back 2.2 million barrels a day back to the market by the end of September. OPEC is being very bullish in terms of their demand forecasts. They're saying that demand is going to be increasing in the second half, continuing to grow. They're looking for it growing next year, albeit not as strongly as they had previously expected. But most of the analysts that are looking at the market are looking at prices going down by the end of the year and staying lower, kind of around that 60, 65 handle through the end of the year into next year. So they're looking at a worse demand picture. Of course, the geopolitics is impacting that. If we do get some Russian barrels removed from the market, that will kind of absorb some of that additional OPEC Plus crude coming into the market. But right now, it doesn't seem that the traders are seeing that much. As we earlier discussed with Stuart, those signals coming out is that there's not going to be a great deal coming out of that meeting. So we may not see some real sanctions activity. We were waiting for that last Friday. It didn't come. We'll see what this Friday brings us, Lizzie.
Well, Anthony, thanks for tying it all together for us. Anthony de Paula, Bloomberg's Middle East energy reporter, we thank you. Now, for a look at some of the other stories that we're following this morning, Israeli Prime Minister Benjamin Netanyahu says that he will not agree to a deal to free only some of the hostages held by Hamas, signalling a partial ceasefire deal is no longer possible. Speaking to Israeli television, Netanyahu said that an agreement would have to meet Israel's terms, including the dismantling of Hamas and demilitarization of Gaza. He also said that he would allow Palestinians to leave the enclave as the military prepares for a broader offensive. Meanwhile, Axios is reporting that Israel may send a high-level delegation to Doha later this week as part of efforts to resume negotiations on a Gaza deal. This comes as AFP reports a senior Hamas delegation was due in Cairo for talks with Egyptian officials on efforts to secure that ceasefire. And earlier this week, Norway's $1.9 trillion sovereign wealth fund divested from 11 Israeli companies and terminated all contracts with external managers in Israel. The CEO, Nicolai Tangen, told us that the fund is continuously evaluating ethical aspects of all of its investments.
It's important for us not to be political. We are an investment fund. We have one overriding goal, and it is to make money, of course, within the mandate we have from the ministry. Now, we divested from these Israeli companies, not because they were Israeli, but in this case, because we wanted to simplify the portfolio management we did in Israel. So these were companies which were not in the index, and we decided to take home the asset management. We discontinued 3 external relationships with external managers, and then we decided to do it ourselves, just to kind of simplify what we are doing and how we deal with this.
Are you evaluating at all changes to some of your responsible investment strategy as part of this, Nicolai?
Well, we are continuously evaluating this. We also have a separate entity called the Council of Ethics, which is looking into more, ethical aspects of our investments. And then, in terms of being invested in Israel, that's a political question. It's not a decision that we do. So what we do is to make sure that we invest in Israel in a responsible way.
The Norges Bank Investment Management CEO Nicolai Tangen speaking with Bloomberg's Danny Berger there. Well, coming up on the programme, we're going to talk to the Presight AI CEO about the Abu Dhabi-based company's second quarter earnings. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, earnings season continues, of course, and Presight says that second quarter revenue and net profit rose, fueled by its acquisition of AIQ, a firm specialising in artificial intelligence solutions for the energy industry. Now, the Abu Dhabi-based AI company also benefited from expanding internationally, so could there be more of that expansion to come? Well, I'm pleased to say joining me now is the CEO of Presight, Thomas Pramotedham. Good to see you, Thomas. Thank you so much for making time.
Thank you, Lizzie. Thanks for having me on.
I've just been flicking through your results this morning. You've got first half revenue up 80%. You've upgraded your outlook. What's powering this positivity for the rest of the year ahead?
Yeah, it's definitely an exciting time. We are really riding on the momentum that we had with a quarter-busting first quarter. Now, H1 is at 80%. The order book has grown. In the first quarter, we took in about 1.7 billion dirhams of new orders. Our order book now stands at 3.7 billion dirhams. We're seeing momentum in the domestic market as Abu Dhabi strives to be an AI-native government. Presight is benefiting from that. We closed about 300 million dirhams of orders this quarter with the Abu Dhabi Media Council, with the Department of Energy, and we're seeing our international business grow. We inaugurated our first regional HQ in Central Asia in Kazakhstan just in May. And right now we're delivering the first smart city project for the capital city of Astana. At the same time, we're continuing to use the regional HQ now to grow the Central Asia space. And of course, you have heard about the agreements we're signing in Africa. Quite recently in Malaysia, we've been nominated as the partner to drive AI digital transformation for the Malaysian government. And these are the pillars that are driving the growth that we're seeing. And we see this momentum taking us to the end of the year, for sure.
Yeah, so if that's the case, are you planning to expand even more outside the UAE?
Well, I think for sure, Presight has been the net largest exporter of Emirati-based solutions. We've developed the solutions in the UAE itself, tested with the Abu Dhabi and UAE government, and now we export it. So international will continue to be a big part of it. We're expecting international to be about 30-40% of the business. The regional HQ in Central Asia has proved its point, and we've continued to expand not just in South Asia, in Africa, but also in the Balkan region. And we have announced an upcoming Albanian smart city project that will begin in Tirana.
And Thomas, I wonder what you make of Palantir's meteoric rise, because you've got similar businesses. Their shares have rocketed. I'm curious why you haven't seen a kind of similar price to earnings ratio.
Well, I think it's amazing, and it's not just about Palantir. If you look at how AI is driving both the semiconductor and the AI solutions company, and then you see companies like Palantir, Nvidia driving a big part of this growth. We're excited about it because we're really riding on that AI wave. But if you bring ourselves closer to Abu Dhabi and the UAE, Abu Dhabi is now becoming the capital of AI and the capital of capital. And if you look at the recent engagements between UAE and the US building the largest AI infrastructure and cluster outside of the US, and then you see companies like Presight being able to build infrastructure agnostic solutions that drive applications in both the government sector, in the financial sector, energy is something that you're familiar with, and in smart cities. I believe what Palantir is doing is a good example of what the aspiration could be, and we continue to want to drive that. But what's for sure is that the AI era is here to stay, and companies like Presight that will continue to develop applied artificial intelligence into sectors to create impactful value, I think that's really going to be the wave to look out for.
Well, you mentioned energy. Can you talk to us about how AI is being deployed at scale when it comes to oil fields?
Well, definitely, and quite recently, and you have reported, our joint venture with ADNOC AIQ launched last year the first energy large language model that aims to first be built on 70 years of ADNOC data. Second, it's revolutionizing the work that we do in the upstream reservoir siting and seismic analysis. I'll give you an example. What used to take 3 months, 5 engineers to do can now be done in a day or 2 with the same level of accuracy. But the application of AI is not just in the upstream oil and gas. You expect it to go through the entire value chain. In the UAE itself, Presight is working with the Department of Energy to launch a first AI water and electricity application platform to look at how we go from molecule to consumption. At the same time, even in enterprise AI, we are now helping the Emirates Nuclear Energy Company to apply enterprise AI within their workflows within the organization. So AI in its application in oil and gas and energy sector is not just about the field operations or drilling, it's really across the entire value chain and the organization.
All right, it's really great to get a feel of what the business is up to at the moment. Thomas, thank you so much for making time for us. Thomas Pramotedham, CEO of Presight. Great to have you with us on the programme. Now, the next edition of Bloomberg Tech Europe airs this week, continuing the tech theme. We're going to be exploring how AI is changing the way that we work, and that's coming at 6:30 a.m. London time with Tom McKenzie on Friday. So stay with us. This is Bloomberg. Well, Dubai's real estate market has been on a multi-year tear, with home prices soaring 70% since the end of 2019. But some observers are wondering whether it's now a bubble that's ready to burst. Let's talk to Bloomberg's Zainab Fatah, who's been looking into this for us. Morning, Zainab. Just talk to us, first of all, about what's behind the boom.
We've seen since 2020 about a big increase in the number of people who moved to Dubai and who made Dubai their homes. From millionaires trying to shield their assets, we've seen an influx of people who came from Russia and Ukraine when the war started, and also Chinese investors, as well as regional money coming into Dubai from Egypt and the rest of the Middle East, which is an area seeing a lot of volatility, and that's causing a lot of people to flock to safer areas. So we've seen the property prices jump about 70% since then. Rents have outpaced the growth in property prices, and that meant that there is a whole number of developers who are coming into the market from different countries and trying to actually cash in on this boom, building new projects, more outlandish projects every day.
So when the rally seems to be enduring for a 5th year, what's the worry? Why would anyone think it's a bubble?
Because people are looking at price increases and rental increases, worried that affordability is being challenged, and worried that this could be a prelude to some kind of crash like in 2009, or the decline in prices that kind of ushered in 7 years of depression in property prices in 2014 when oil prices collapsed. But the market is different right now, and there is a lot of elements to take into this equation. equation. Some are worried, of course, that the huge amount of supply that is being built and constructed over the next few years, some estimate it to be around a third of existing supply, could actually mean property prices will drop for a long time at some point.
And so looking ahead, what's the bull case then for Dubai property?
Of course, if you talk to any developer in this city, they're all telling you there is a lot more room for growth for both prices and rents. And they say that investors are continuing to flock into the city. They say the government reforms that were implemented that have to do with escrow accounts, down payments that reach 20%, and developers having to pay for land in full before they're actually allowed to build have meant a lot more stability in the market. But we've seen something that started with the trade policies that President Trump is implementing, which meant the dollar had its worst year since first half since 1973. That meant a lot of people are actually flocking to the safety of real estate, gold, and other assets, and that's sustaining a lot of this rally that some expected it to taper off by now. So we've seen a lot of people from Europe come here and buy, which means for them an actual discount because the currency here is pegged to the dollar. Some say even if you actually come out of the market without growth in prices, just actually a recovery in the dollar, that means an upside. So that's sustaining the market.
OK, for now, Bloomberg's Zainab Fatah, thank you so much for bringing us that story out of the Middle East. Well, that is all we've got time for here on Horizons. But just a bit of space news for you. United Launch Alliance has undertaken its first US national security mission with its new Vulcan rocket blasting off to put satellites into high orbit. You can see it there on the screen. But that's it from me in London. Tom Mackenzie's up next with Daybreak Europe. They'll be diving more into the impact of that US CPI print. So stay with us. This is Bloomberg.